Tesla's Robotaxi event is exactly 2 weeks away from today, and the big whale institutional firms are raising price targets, with even Goldman Sachs today recommending that investors consider buying call options before two big Tesla catalysts in October. Many are now expecting Tesla to have a record Q3 deliveries, and could there also be a positive surprise for the Q3 earnings? We've got the bulls here with us today. We've got Jeff Lutz, also known as Mr. Incredible, Xander Sky, the Froyo Tycoon and Options Bull, and joining us this week is Matt Smith, the Financial Bull. Welcome, everybody.
Hey, Herbert.
Herbert.
Wonderful. So let's get started with the big news. I guess this is news because it just dropped and it's weird, but analysts are much more bullish, specifically Goldman Sachs. I've never seen this before. They're recommending buying Tesla call options before the two big catalysts in October. Gosh, is this sounding like there is kind of a frenzy now of FOMO wanting to get in? So they talk about, obviously, the big events happening. They're raising the Q3, record Q3 deliveries. Production data was coming in, consensus of 460, and these guys are estimating it's going to be higher than that. But this is, the big deal is Marshall highlighted the October 24th expiry call options on Tesla at a 255 strike price. So by October 24th or before them, the price should be at 255. I think we're almost there, aren't we? So what do you think about that, Xander? The call options they're saying by the October 24th one.
Yeah, I find it odd that an analyst would recommend options. It seems like it's something that, I've never heard of them do that before. In the 5 years that I've been tracking it, I was trying to think back to 2020 or 21, and I don't remember anyone calling out specific options in terms of the analyst world. I am, very happy with the price action. I think that if you're going to take on risk with options, you really need to understand the losses that can occur, right? Whenever you're deploying into options and you're buying a position, whenever I do that, I expect the money to be a zero at the end of it. Now, it does play out sometimes in your favor. I just went through the exercise today with my options buddies to show them what unrealized gains looks like at the end of 2021 and what unrealized losses looks like at the end of 2022, and that is where I start with my team and my guys. I tell them, feel the pain first, realize that you will probably lose money, or potentially lose money, and then if you still want to throw the dart, then go for it. But I like the idea that when everyone is being greedy, to be fearful. So I've been raising cash on this way up, and then now if we're going to do some technical analysis, we popped out and we didn't skyrocket to 270, right? We broke through 250, but we had an indecision candle on Monday. So you could see it went up, it came down, and then it ended right in the middle of where it started. And then today we've had on Tuesday we had a middle of the road kind of candle, and then we're recording Wednesday. So this is good, but I want to see continuation. I think the bulls are trapped here, or they're deploying here. So the hesitation and contemplation is very important. But what I'd love to see personally is a bear trap. I want the price to get pushed down to 250, back down past that to 245 and 240, and then when buyers step back in, I think that's a really good, healthy thing to see. And then a continuation up to 270 and 300. It's all possible. But when you start talking about these numbers of the deliveries, Jeff posted a great image yesterday of what it looks like when analysts wake up. And because we're talking about AI and not the cars. So I'm not paying much attention to the car deliveries at all. I mean, I'm looking at China numbers, but at the end of it, I think the important outlook is out into the future. Buying March calls is what I do. I'll buy September calls and beyond, but not these short 3 weeks. The last point on the options world, when you buy a contract that's 45 days and less, that is maximum theta decay, theta being time. So it evaporates like a balloon that you're holding, And if the price doesn't go in your way, the value of the contract keeps dropping. And that rate, rate of change is greatest between 45 and 0. So that's why I like to play with a safety net, and I'd rather make less money and not be so greedy.
The company and the product. I don't look at the quarterly stock movement.
A very realistic bull, questioning certain decisions.
The rational bull. I enjoy listening to bears.
Looking for the red flags. You're supposed to react.
It's just worth reminding people how big this upside opportunity is.
Okay, thank you so much for explaining that. Obviously, this is first time we've heard I have Goldman Sachs recommending call options, short-term call options. We have been reporting quite regularly here, one institutional analyst after another. You have Piper Sandler, Baird, Cantor Fitzgerald, Morgan Stanley, Knight View Capital, and others coming out being much more bullish on Tesla, giving them a small bump, still small bump, or even staying neutral on the stock, but saying all the right things. So Jeff, what do you think's happening? This FOMO coming in. This is Simon Hill, somebody who's keeping track of all the wealth advisor. He's been keeping track of what's happening. And he says 3 days in a row now, we have high volume end of day close on a rally in Tesla. This is classic institutional traders using algorithms to accumulate throughout the day and then making large fills end of day. This is not bearish behavior. So if you take a look at what's happening at the end of the day, there's a pop. And I guess what these guys are saying is that shows you that there is volume and then there is buying by these big whales. Is that what you're saying, Jeff?
Yeah, I'm looking at it for the last couple of days. It looks like there's definitely some volume pops occurring. But you know what? I keep reminding people that you really have to study this for yourselves and don't listen to one analyst over another. These analysts have been chasing on the upside and they were also behind on the downside. I think, Goldman Sachs recommending call options, I think it's absurd. I think they should be ashamed of themselves. And because they don't understand the position necessarily of all their clients. Maybe it works out, maybe it doesn't, but I'm not sure that that's the right thing to do. And I'd be interested to see where they're positioned because they've always been pretty low in terms of from a price target perspective. They've been really behind the curve on Tesla before. So I don't know how they're coming out and doing this. And, finally, I mean, these are the things that we've been talking about for a long period of time in terms of accumulation of AI assets. The fact that real companies that, and I think Jensen Huang even said this earlier in the week, that companies that are serious about AI have their own, are building their own infrastructure to actually drive the service and drive the whole thing end to end. They're not, they're not cherry picking here and there and trying to do things sporadically, but then just putting the word .ai on the end of it. They're really getting serious about the infrastructure. They're getting serious about the edge devices, and they're really serious about owning that end-to-end piece. So that's what Tesla's been doing. That's what we've been talking about, over the last at least 18 months. We've been talking about this, and we're going to see a data point, I believe, on 10/10, where Tesla tells us where they're at. We get data points every time we get a release into our vehicles, and we're seeing more features being added, and we're seeing improvement in terms of the performance, albeit, it'll be mixed, for some period of time. But, we're seeing those data points, but we're going to get an official data point from the company on 10/10, and we'll see where they're at. But in terms of Goldman and, this recommendation to buy call options, I remind everybody that everybody has their own unique situation, their own unique time horizon, and their own risk tolerance, and they should evaluate it accordingly and not listen to someone, anyone, including us. Again, we're talking on this show. We talk more about the business and what we see Tesla doing and where we see them differentiated versus others. But in terms of this direction on call options, I think that's a really I'm surprised they did that, and I don't recommend listening to them. And just in general, I don't recommend listening, not on this specific call.
Yeah, wonderful. Thanks, Jeff. Absolutely. So what we're expecting, right, is we're seeing October 2nd, which is 7 days from now, we should see volume production and delivery numbers. Some people are saying it's going to be the best quarter for Tesla, Q3. I'll ask you that, Matt, what you're saying there. And then we're going to have October 10th, the actual event. Robotaxi event. And then somewhere October 23rd, Tesla should report their Q3 numbers. And I know that, Matt, you've got, I'll be drilling you a little bit of the expectations for Tesla's Q3 numbers. So this is another article just written yesterday. Tesla's potential best quarter in China raises expectations. This is why several of these analysts and these banks are boosting their delivery estimates this week, because they're seeing strong China, but they're seeing, a little bit weaker in Europe. But overall, they expect it to be quite good. Best quarter ever. 4 analysts boosted their estimates for third quarter delivery numbers. All point to signs that sales are starting to pick up in China. Good opportune time for Tesla, despite the ongoing weakness in the US and Europe. Dan Levy now expects deliveries of 470 vehicles, 470,000, up from 462. This is what's happening now. A beat could drive further strength into the stock into Robotaxi day, right? So there's these catalysts that seem to be, you had the interest rate cuts, then you have possibly good, strong numbers in production delivery, then you're going to have Robotaxi day. And then you've got, what is it? Here we go. China is a Cybertruck. Piper Sandler thinks Cybertruck deliveries are supporting strong demand. They're expecting 459. Tom Narayan says 460. So the actual average of these analysts is 462. What do you think, Matt? Are we going to beat 462? These are now the analyst estimation.
Yeah, I'm at 469. I mean, everybody's a little bit of a guess, is doing a little bit of a guessing game. So I think nobody's number is completely gospel. But I think what you're seeing is this concern that we had, especially in Q1 of this year, when deliveries were just like a total shot in the gut. Deliveries seem to be stabilizing, especially in China, which is really good to see. Cybertruck is definitely kind of helping to augment that growth that we're seeing year on year. So I think we're in a pretty good spot, probably better than I would have expected even just 3 months ago. So I think these things all matter, but I kind of want to just echo the things that Jeff and Xander were saying on like not taking this this option stuff too seriously. I'm sorry to kind of kick it back to that, but I think it is actually insane that Goldman Sachs put out a note to do that. We're already up 16% month to date in the last month. And so generally you don't want to be buying call options right on the back of a big move like that. So seeing this kind of change in sentiment, and one of the things we always try to do for our own clients is to kind of gauge sentiment. And when everybody's like hyper bullish and thinking we've got all-time highs in the next 6 months, typically what happens is the opposite. And similarly, when there's absolute panic in the streets and everyone's just feeling miserable, that's a good time to be adding generally. So my senses were a little bit more on the positive sentiment side, a little bit too strongly. I think we do have a lot of excitement for good reason about the 10/10 event, production and deliveries, and then Q3. So some nice catalysts. But what we've seen with these events time and again is that you get a nice rally into the event, and then it's a sell the news sort of thing, because Elon's going to say what he's going to say, and unless they say, hey, we've actually solved like autonomy and it's launching today, and which is completely unrealistic. There's just I struggle to see what would actually help to sustain a rally there going forward. So all that's just to say, like, take it very cautiously, and just because we're feeling great, we've had a nice little rally this month. That like we don't just continue in that straight line forever. That's not how stock markets generally work.
I did a live stream today with Nick Gibbs and Brian White. Nick was saying that what's unique about this time is October 10th is sandwiched in between the production delivery and the earnings call. And so, yes, it can be, buy the rumor, sell the news after October 10th. But in a couple of weeks, they're going to report earnings. And it looks like if the production deliveries is good numbers, then people are looking forward to a good earnings call too. So it might just drop and then pop back up again.
It's possible, but I think what we really need for a sustained move back, let's call it towards all-time highs, is some kind of credibility on the earnings growth side. And I think the only real credible path to that is on the Robotaxi, or even if it's just increased take rates for FSD, some kind of proof that that's building out. Energy is going to help, but it doesn't really kind of get you to the types of earning growth that you need to get, I think, the stock back to all-time highs. And so I'm jumping the gun a little bit on the earnings numbers, but like my model right now for Q3, I haven't completely refined it yet, but I'm at about 63 cents of adjusted earnings per share. which is roughly in line. It's a little bit lower than where Wall Street was or is, and it's a little bit lower than where Tesla itself was last year. So when you're still looking at the fundamentals and saying, okay, like, they're flat, like at least the blood has stopped spilling on these, the margin pressure that Tesla has seen for the last 2 years. It's not exactly, awe-inspiring to the point where it was, okay, we're going to be doing $1 in quarterly EPS. And so then you can kind of justify, a $300-400 price target in the kind of short to medium term. So, I think we're on the path to slowly get there. I think it's kind of a story stock at this point, which I've always avoided saying that in the past because I've always been very focused on the fundamentals. But with where we are right now, like we're really close to FSD, but it's also like you could also make a very strong case that we're not at all close to like robotaxis. And so it's really just what do you believe this company is going to do? And I think if you do think they're just a car company, then the stock's got to go down. But if you think they're going to crack autonomy, the stock at some point has to go up.
I don't know. Can I push back, guys? A little bit, just a little
Yes.
bit. Let's talk Tesla as a car company. Okay, let's just forget all the other good stuff. Just say it's a car company. But as a car company, you're seeing China growth return. You're seeing the China, like the spiffs that they're doing to improve the economy there. You've seen U.S. cut interest rates and about to continue cut interest rates. This is the reverse of what happened when, as a car company, it got hit. So just as a car company, it's going to go. Now you've got 2 new affordable vehicles coming out. Everybody I've spoken to believes it's highly likely that it's going to come out. It's because it's on the same production line and with some unboxed models. It's not this brand new, vehicle that's being done. That gives us a little bit more comfort that it's more likely that it will come out in the first half of next year. So you got 2 new vehicles. You've got the Cybertruck showing that it's actually succeeding, right? It was slow at the beginning, but now you're seeing the scale coming up and it's been well received by consumers. It is a winner by all accounts. I've asked this question to as many people as possible. They say that, yes, Tesla, you can say now, Cybertruck is a success. So as a car company, what am I missing? Why is this an issue?
Well, so I think where I would push back on that is like you can bake all that stuff into your model, and the company's still at a reasonably high PE ratio. So just for example, I was looking at my own model here, and I'm looking at deliveries next year, taking into account all the stuff you just said of let me see what it is. Actually, I'm kind of going against my own point here. 2.1 million. So pretty decent growth. Every single quarter, I have over 500,000 units, which we've never been there once. So like that's pretty meaningful. I'll skip through all the other kind of bits and pieces of the model, but essentially with those numbers, I'm coming up with earnings per share of $3.73. Which, if you take the $257 price today, we're definitely in the matrix. That's an implied forward PE of 69. Which is actually a little bit on the high end. So you say, okay, you're just a car company. Like, what happens if in 2026?
Matt, are you saying that 2025, you're modeling 2.1 million cars sold in the whole of 2025?
Yeah.
What? Okay. All right. Well, there's a disconnect right there.
All right. Well, what do you plug the numbers in? You tell me what you want.
Well, this year, I believe we're going to hit 1.8 million, right? That's a conservative number. And you'll see that all the analysts are shooting for 1.7 million, 1.75. They're still below 1.8. I think that Tesla's not going to allow their sales for 2024 to be lower than 2023. I think they'll probably be at 1.8 with all the incentives. I think that with the interest rates coming in, with the FSD being a demand driver, with the additional success of the Cybertruck, then you got 2 more affordable vehicles. Now, if they come late, middle half of next year, they're still going to contribute. It's not going to be 2 million, right? It's going to be at least 2.5. In fact, Jeff, please support me. What did Tesla actually forecast for the next 2025?
They forecasted production at 2.7, and they don't normally forecast production, well in advance of where they think they're going to deliver, and they're pretty good at when they install capacity that they don't. Their intention is to not leave it idle. I mean, there have been exceptions to that in some geographies, but yeah, I mean, here's my take on this. First off, everybody's allowed to do their own homework on it, have their own set of opinions. Matt's set of opinions are informed. Herbert's set of opinions, are informed. And I think everyone else should do their own. But Tesla is on the record saying what they're going to produce next year. Okay, so if they change the record, then they change the record. But I do agree with the backdrop of declining rates, but you have to be real about it. You have to look at the dot plots. It's not going to be 400, basis points of rate reductions. It's probably going to be on the order of, 200, or something on the order of that. So where we're at right now is, I think you have to look, if you're just looking at the car company alone, you have to connect a couple of quarters together. You can't over rotate on one quarter or another. So you have to look at, as to Matt's point, if we stop the bleeding on gross margins, you have a big put, or you have a big take, I would say, on gross margins in terms of all these 0% and 1% financing, 0% down, various things happening in various regions. This takes Tesla's gross margins down. It doesn't impact MSRP, but those cost of sales lines between MSRP and what's called the net ASP, or the net average selling price, it takes that down. And that's net ASP is where gross margins are calculated off of. And so gross margins are going to be stressed from that respect. But this is where the bull bear debate, I think, becomes quite interesting. Well, first off, what is everybody else doing in the auto space? They're doing various promotions as well on interest rates, because interest rates are high. 80% of people who go buy a car in the US finance. 1 in 5 of those people are being rejected when they go for a loan. So the auto companies have to step in. The way Tesla steps in impacts their gross margins up front, and more adverse than others with the way that they reflect it on their earnings. So you have to keep that in mind. So this isn't for free. However, here's the bull bear debate I find quite interesting. Well, what's the alternative? Idle your factories. What happens when you idle your factories and you take your utilization lower? Your COGS go up because you're dividing your fixed costs into lower number of units. And the same thing goes for your suppliers. Your suppliers can't give you reductions. In fact, they may try to give you increases. And then your own factories start, turning into a furnace burning cash. So the alternative would have been lower gross margins anyway. So the fact that they chose this path, and this path connects to a lower rate environment. We're on the backside of this. They could have never done this rate program when rates were shooting up higher and higher, because it would have been a longer process for them to unwind. So to me, like, these are the right moves that they're making. They don't come for free. You're going to get a higher unit quarter here potentially and do well. You're going to, that gross margin item is going to be stressed, and people are going to ask the question, have we bottomed or not? But now that's where I come back and say, you have to connect a couple of quarters together, because if we're in a declining rate environment and Tesla's going to higher volume, cars in the future that are lower cost to build, and therefore lower cost to consumers, and should be higher volume, and they forecasted the 2.7 million in production. If you start connecting a few things together, it looks like they're painting a path of improvement. Versus if you take the Elon and the Tesla management team from 18 months ago, most of the quarterly calls were a doom and gloom proclamation. They can't say it now, just on the auto business alone. And then we'll talk more about the Robotaxi piece of it in a bit.
Jeff was reading my mind. My question literally says, will the incentives keep EPS flat? And he just beat me to it. So,
I've got a question for you, Jeff.
Can I just push back on one thing there? So, I mean, the line that you're talking, so Tesla did not give explicit guidance for, the 2.7 million figure. What they said in that letter, which I think it was a great pickup by you, Jeff, but that it will enable a 50% growth in production over the 2024 volumes. So enabling is a lot different from we are planning for and guiding for that type of number. I think, as much as I'm excited about some of these macro, trends of lower interest rates and the good stuff happening in China, like that's really nice. But here today, after the rate cuts, you can still order a new Model Y on September 25th for September delivery. So, like, at some point, like, the demand has to show up in order, if you're going to assume that they actually get 50% increase in volume. And until I see a lot more substantial signs that you've actually got like longer lead times on some of these deliveries or something like that, I can't give Tesla credit for in the short term for those more aggressive year-over-year growth rates.
Yeah, you can do that, and that's fine. Everybody can interpret these things and put more weighting on some things, less weighting on. It's totally appropriate. But that what they said in that paragraph on page 10 in the earnings deck, it can't be construed as anything but production guidance in terms of what they're saying they're going to do. Now, right, you can say, what if the lower cost vehicles are a couple months late? Well, that could put pressure on that. Or, what if something else occurs? Anything could put pressure on that. So you just have to know, like, that's their plan of record. That's what they said that they're going to do. And they're normally not that explicit, and they're normally not, quite frankly, projecting this stuff that far out. So, and here's the other thing. There's some calls they have to make with suppliers many months, sometimes 9 months in advance, depending on the type of capital or depending on the type of supplier. So some of these calls they have to make. Now they can back off, move out, and do some different things, but I don't know. They must feel pretty confident in it, and so we'll see. Anyway, you don't have to hang on. You don't have to hang on to too much. It's just it's in their earnings deck, and it's part of their guidance. But yeah, everybody who analyzes the name could say, well, that's great. I'm gonna park a 30 or 20% reduction on that just because I want to be more prudent, and you can do that.
I agree with you, Jeff. This sounds to me, when I read the sentence, we're going to fully utilize it. This will help us fully utilize our expected maximum capacity. It goes to 3 million. That's maximum capacity. That's going to enable us to have more than 50% growth over 2023 production, more than 50% growth in 2020. So 1.8 million, more than 50% growth of that.
And that's not the CapEx that will build the Robotaxi. So that 2.7 does not include the Robotaxi compact vehicle. That is different manufacturing lines, incremental CapEx to the 2.7.
Wait. How many vehicles were produced in 2023? 1 point.
About 1.8. 1.85, I think.
Mm-hmm.
In 2023, 1.85.
Yeah.
Got it.
Yeah.
Okay.
Yeah.
So this is the words were good. I want to pause there. Jeff's look when Matt said enabling was priceless. Go back
I
and
know.
watch it. I was like instant fact checking. I was like, oh, he's fact checking him right now.
He knows that line word for word. So he already said enabling, despite the word that said enabling.
Matt can interpret it the way he wants to interpret it.
Well,
Totally fine.
Let me also just say this. So even if we give full credit to Tesla for that execution of 2.7 million, which I think is aggressive, and I wouldn't go that route. But even if you do that, I mean, so I just plugged in some quick numbers. I'm getting 2025 earnings per share of $4.35. So where the stock was at the end of today, that's a 59 PE. So where my base model was versus the give Tesla tons of credit model, it's a difference between 69 and 59. My point is, like, that's still too high if you think they're just a traditional automotive company. So we've kind of been arguing a lot about like the little, like the nitty gritty of what exactly is your forecast. When my point is, even if it's 45, like they're well above their peers, and they kind of have to have the secret sauce on top of just the auto business to really sustain the all-time high stock price going forward. So I think it actually doesn't change what I was saying.
Oh, I agreed with you, by the way. So if it's just an auto company, fine. The future growth of EVs and all that, you can't justify 69.
I don't agree with that.
Oh, ooh, I could justify 50p. I don't know if I can do a 69, 70, 100 like that. But yeah, go ahead, Jeff.
Well,
we're crossing your outline off today. We're just going on the tangents.
That's okay. That's okay. That's good.
No, traditional auto companies have single-digit PEs, so Tesla is getting credit already.
That's exactly the point. Yeah.
Yeah.
That's my point.
So they already. Well, hang on. We're not done. Can we finish? Can I finish?
No, you're.
I'm speaking.
I like this.
I'm speaking. You like that? Okay. Look,
I do.
when you're in 2021 or 20, pick the year. Everybody wants to like open the phone. This could be the type of investor and trader you are. That's totally fine. That's do. Everybody should do what's comfortable to them. But if you listed your stocks out and you treated it like the yellow pages and said, well, you know what? If it's over this number, PE, then it's not investable. That's what you do. and that's fine. In every tick over 35 or 50 PE in 2021, everybody was complaining about Tesla. Why are they doing this? Yes, there was growth and so forth, but it was just an auto company. And yes, there was growth and it was getting credit for growth. That's why it's not single digit P's. That's why it was 35, 40, 50. Well, guess what? It got up to 255 PE at its forward PE at its peak. And my point is there were people, complaining about the PEs from 50 all the way up to 250, I'm sure. So I think people just need to make, and I'm not saying that we should go back to a blow off top. I'm not projecting a blow off top. I'm just saying that this is a difficult company to evaluate, and it became a lot more difficult than 2021 to evaluate based on the number of businesses it's in presently and the number of forward revenue areas that are potential. It just became a lot more difficult to evaluate. So, but everybody should have their own way of doing it and be comfortable with it and do as they may. I'm just saying, if you did that in 2021, the P went up to 255 at one point.
Yeah, I want to point out that the current forward PE, according to Webull right now, is 112. Okay, based on whatever EPS they're using, and there has been no pullback. This is when you look at technical analysis, this is what I look at. Are bears stepping in and trying to push this thing down? You're not seeing that. We saw 180 on August 5th, I think it was. August 5th, and it's been up. If you go back to the original announcement, you had the move from 180 to 270. I'm cautious here because if you're into technical analysis, if you had a 270 high, it's more like 264 on the daily chart. We might be at this lower high portion. So, but bears haven't stepped in. Tesla is getting credit for something way more than just auto, right?
Mhm.
You're seeing the invites go out right now. It's happening, right? This is the moment that every bull that we've been waiting for this. So it's important to be cautious and don't go YOLOing into options, even though that's my thing. I just wait for the market to actually give a direction that or earnings or something, or don't. It's up to you. But the point is, the EPS is something that, to Jeff's point, it's something you could look at, but it's definitely not an indicator of what a 10x company will do. If you're measuring the growth rate of cars, it's overvalued. If you're measuring the potential optionality of what's coming, then that's why we're here. I'm not here for cars.
We're not here for cars. Tesla's not a car company, but I just wanted to remind folks that we might actually already be back to the original 50% growth rate, especially after the following year.
Yeah.
Especially after the following year, when you've got the two new affordable models, you've got the Robotaxi, you've got the Cybertruck much more into full scale, semi add to that, and you got the cars that are, so we'll see. With lower interest rates, we might actually be back to the 50% growth rate. Okay, so let's change the topic. So we are all bulls. Tesla's not a car company. We see value in bots. We see value in Robotaxi. We see value in energy. We see value in AI. All of these analysts, by the way, in their notes, they refer to all of these now. So there's been a massive change in what they refer to Tesla as an AI company. Despite that, their next 12-month price target is like Piper Sandler increased it by $5 to 310. And Baird or Cantor Fitzgerald neutral, despite everything that they're saying about how great this is.
Yeah.
So in our own midst of our bull, supposedly we have a fake bull here, and that's Matt Smith. You're still a bull, I know.
I'm keeping it real for everyone.
You had a great post just a couple days ago, and it's sobering. You said that, hey, I tried out the full self-driving, the newest version, and it changed your projection. You now think that we might not get to Robotaxi in 2025. Can you explain to us what your thinking was there?
Yeah, and so I'll just give a quick overview of what I experienced for those who maybe didn't see. But so I've been driving it for about a week now, not too many miles. I would say less than 100 miles, and I've had two what I would call safety critical interventions where the car was stopped. and it started turning at about the exact like perfectly wrong time to start going, where I had to slam on the brakes to avoid like getting T-boned in two different situations. Possible the car would have stopped, but it, the wheel turned and the car accelerated from a stop in both situations at the absolute worst time. So just that's a pretty bad reversion. And I think the most important metric is safety. How many like safety critical interventions you have. So if you have 2 in 100 miles, it's very hard to argue that that's a statistical anomaly. If the safety rate should be at this stage, I don't know, let's say 1 per 10,000 miles or something like that. So that was pretty kind of sobering for me. And so as I'm kind of evaluating everything, my thought just maybe 3 months ago was that I thought the first Robotaxi ride would occur at some point in calendar 2025. Since then, I've kind of seen the updates slightly regress, I would say, from a capability and kind of smoothness perspective. And so when you just kind of look at it, where the baseline is pretty low relative to where safety needs to be right now. And then on top of that, the rate of improvement hasn't been what I thought it would have been after we switched to version 12. My thought with version 12 was that we'd be able to iterate a lot more quickly on the different versions, since you're basically using the same end-to-end neural net and basically just feeding in more and more data and kind of feeding that flywheel. That hasn't been my experience to date. And so, while I'm aware of everyone saying like, oh, like you're just thinking linearly and you're not kind of extrapolating about, the compounding impact that will occur. But my point is we should be seeing multiple, 5 to 10x improvements in driving capability. And so far, the initial V12 was definitely, I would say, like a 10x step up in kind of the overall riding. We still have like 500 to 1,000x more to go to get to the point where I think we're Robotaxi ready. And just putting all that together, I don't think we're going to get there by the end of 2025. It's not really that drastic of a claim, because I could be wrong, and really I still think we'll get there by 2026. But it was a little bit sobering and kind of caused me to push my own expectations for the first paid Robotaxi ride out to 2026. And now, Jeff, let's let the beatings continue.
So Matt said quick and brief at the same time, so that's what that was.
Tautology.
Queef. I forgot what I was gonna say. I was just I got distracted. Go on.
I was expecting Jeff to jump in on the.
Yeah.
Good. I was just waiting for Xander to quit whatever's coming out of his mouth.
One quick caveat I'll throw in before passing it over to Jeff is I'm on a hardware 3 Model Y, and I think there's differences for sure that are in the different models. In fact, Bradford and I did a video we posted on our Rebellionaire YouTube channel not too long ago, comparing the exact same route of my hardware 3 Model Y, hardware 4 Model Y, and then AI 4, I guess we should call it now, and then the AI 4 Model X, and just seeing the difference in behavior among those three. It was actually pretty shocking, because the AI 4 is definitely a lot better than AI 3. So with that kind of caveat in there, I still think the conclusion holds, because you like the models, the improvements to AI 4.
Disagree.
All right.
This totally disagree, because here's why. I don't look at the regressions. I look at the progressions only. If this was fixed before, if it worked fine before, and now it's just a regression, I don't care, because it'll get fixed. What I look for is what are the things that it wasn't doing and now it's able to do. That's all I care about, because that's that march of the nines. What are they solving that they didn't have before?
Pretty smart. Jeff.
What else? I mean, coming from a background where we had to predict, the failure rate of devices in people's hands, a year before we shipped the product, and then financialize that number and work with our finance teams on how to reserve for it. There's a process to do this. And all I'll say is you can't, I'm not going to Matt has an opinion. He can state his opinion. It's totally fine. What I'd rather state is we're in a bit of a data starved situation. Okay. So you have these homegrown trackers that people are using. You have people talking about, numbers from other companies and what they say their interventions are. They're all measured differently. None of this stuff is regulated. We're in a data starved situation, including from Tesla, by the way, as well. And so we don't understand the starting point. We get some of these proclamations of there'll be a 5x improvement here and 6x improvement here, but quite frankly, they don't owe it to us until they get this thing to a production ready, situation. They don't. I mean, when Apple's doing beta tests on iOS 18, they don't publish their bug curve. They don't publish their bug curve before they ship it or after they ship it. So these are all different situations. I understand it. I'm sure we'll get plenty of comments on this, but here's my take on this. It's hard. I can't predict when the first my answer is I can't predict when the first Robotaxi ride is going to be, because I don't understand the mechanism and the rate of change that's going to occur from a improvement perspective as they bring on this additional training capacity and what they're allowing it to do and what's happening on the compute side of the vehicle. Are we using the full capabilities of AI4 or not? We were told that we aren't yet. Okay. So there's a lot of unknowns here. So for me to put a dart out there and say, I think, it's not going to happen in this year or it's going to happen in this year, I'm just not informed. However, Tesla has a set of data, and Tesla should be pretty well informed on the rate of improvement that they should be able to enable, and they should be able to test this in the field and be able to validate their claims. And if they aren't, they have to go back to the drawing board and figure it out. But so what I'm saying is if you said based on all the publicly available information today, it's your job to predict when this gets to a Robotaxi ready threshold, I would say there's not enough publicly available information available. And whatever is available, these 79 people in North Carolina and these 110 people here, that's not enough information to draw a conclusion. It's enough to tell you, do you have a disaster on your hands or not? But it's not enough to tell you to the level of accuracy that's needed on what the end point here is. So I'm looking forward to an objective update from Tesla in terms of where they see this, and they can share whatever they want to share. There's no, restriction, but when it comes time to having conversations with regulators, they will have to share the information that's requested from the regulators. And hopefully from a regulation perspective, we can get some consistency between states. Remember, there is no federal regulation here. This is by state. And then hopefully we can get some consistency even internationally as well in terms of how this is measured. But my short answer is I can't tell you what that date is based on all publicly available information, including my own drives.
So, I've been getting a lot of flack for this. It's like, but my only claim is that I used to think we'd get Robotaxi rides in calendar 2025. Now I think it's most likely to 2026. Sounded like you were kind of disagreeing with me quite vociferously, but then you were also saying we just don't know. So I don't think we actually do disagree too much. I'm sure
No,
my own.
I didn't say I did disagree. Yeah, I said you're allowed to have your opinion.
Maybe it's just that Herbert in the chat is saying I'm saying dumb stuff, and that Gordon Johnson joined.
Maybe, yeah. Maybe Herbert should now state his position.
I did want to share, just one. You write in saying that Tesla's got great data, but even Tesla has been notoriously bad at this stuff, and Elon's been promising ass for years, and now
Tesla hasn't talked about data, Matt.
I just wanted to share the anecdote again.
One employee has.
What's that?
One particular employee has made claims, but if you look at you haven't seen a chart. You haven't seen a table from Tesla on disengagements. I haven't seen it. I haven't seen a forward-looking plan with projections. I haven't seen that from a Tesla employee that works on this team. Maybe someone else has it.
Yeah, I would suggest that probably doesn't exist. I would imagine.
Guarantee it exists inside of the company. The question is what they want to share externally, but I guarantee that exists inside of the company.
It's a fast way to lose your job to share that.
Yeah, no, obviously it'd have to be with permission to do that. My point is I haven't seen it, and to say Tesla has been inaccurate on this, I think Elon has admitted that he's been inaccurate in his projections, given how difficult, nobody's ever done this before. So I think he's actually pulled back. Well, he hasn't pulled back on the date. He's more of he has pulled back on the date. He hasn't pulled back. He is continuing to talk about rates of improvement. But if I were in their position, if I'm going to say that, I would want to actually back that up with some amount of relative data. They don't have to even put numbers on it. They can put relative data out there. But anyway, what does Herbert think?
So I've never given any forecast, unlike Matt did. I never said, I think it's going to be first Robotaxi ride in 2025. Never said that. I look at product and I look at the company and I look at the solution that they're using, right? Neural nets, amount of scale, compute, is it working or not working? And again, the thing that we need to remember is that what has happened in the last 3 months is that they've now got online one of the largest supercomputers in the world. Elon has said, if you believe Elon, if you believe Ashok Goswami, if you believe Andrej Karpathy, that more data, if they put in, I think at one point I had a quote, he said, if you put in 1 million miles, it gives you a certain outcome. But if you give 2 million, if you give 3 million, and he used those words, right, you get a lot more better outcomes. And so I think that you need to just consider, what does it mean now that they have Colossus or Cortex, one of the largest supercomputers in the world? Then they have 7 million cars by the end of this year, all of them submitting data. And they've already seen what it was when they had just a subset of that cars submitting that data, what they saw the improvement. Now, maybe they themselves won't know, right? They may not know. They're just assuming. So I don't know. But as long as I see the progress in terms of compute going up, miles getting inputted better, neural network looks like it's already able to solve problems one at a time. They know, by the way, how to solve a edge case. You heard Ashok Goswami himself say, "Oh, we already have that." Remember that first famous one where the green light on the left side turned on, and then the car thought that it was for the straight, so it went forward. And Elon goes, "Oh, we'll need to go and do tests on that." And Ashok said, "No, we already have that data. We just need to feed it to train it again." So like Xander was saying, it's like a matter of just feeding more data training. So for me, I'm bullish on their ability to solve the problem. I don't give dates because I don't know. But apparently you knew, Matt. So you said 2025.
Well, I'm not afraid to kind of put my opinions out there, and I'll be wrong about almost all of them, I'm sure, but I think it's just helpful to kind of share your thinking about this. And I agree with everything that you said about, all the infrastructure that they've got is so key. And that's why I'm so bullish on Tesla, even though I'm slightly bearish, not in the stock in the short term, but just in their ability to actually make the meaningful steps that they need to in the short term. Because and while they have this amazing infrastructure in place, the rate of improvement hasn't really been as aggressive as I would have expected it to be even just a few months ago. And what I was going to say earlier about actually Smart Summon, I was just looking at some old tweets from Elon, and everybody knows that Elon is overpromised and underdelivered, but this kind of surprised me when I saw this. So in October of 2022, so nearly 2 years ago, he said actually Smart Summon is almost done. Then in June of last year, 2023, he said actually Smart Auto Wiper software release in about 3 weeks. I still think that doesn't work. And then actually Smart Summon probably a month or two after that. So these are obviously extremely hard problems that are taking them longer than they are expecting. And think about what we still need is the banish functionality where you get out of the car and it actually parks itself. We need to see some of this functionality improve a bit. Or at least see the rate of improvement increase a little bit more before I can get.
Yeah, can I address
in the short term?
Now I'm going to address what you just said. So those dates that you mentioned, June 21st of 2023, Elon submits a post saying our patented actually Smart Summon is probably a month or two after that. Autos Wipe Swiper. Well, at that date, they did not yet kind of fully jump onto neural nets. They hadn't realized that neural nets was going to be the solution. So, he was projecting based on software development. At this point, it's a totally different game at this point, right? They're seeing tremendous leaps in ability for neural nets to understand real world driving. And so now, and again, the key thing is not to listen to what Elon says. The key thing is to listen to what the Tesla team says. And you saw the roadmap that the team put out, and they're hitting every single September milestone. They've got October milestones. That's more likely what's going to happen. And so take those words, when Ashok Goswami says, I'm going to see a 3 times improvement or 6 times improvement, he has visibility into all the data, and he would not say 3 or 6 unless he actually knows their actual numbers. Now, does that mean we're anywhere closer to full-time, robotaxi, safety-wise and safety and disengagement-wise? Probably not, but it's still, I trust him. I trust Ashok Goswami a lot. So
Yeah, that was actually really great to see those specific deadlines, and even the hilarious reply that that Ashok had to that with the stressed out guy. I forget what that was, but it is pretty nice to see them actually knocking off some of those individual deliverables. So this could be the sort of thing that somebody was saying, like in V13 you're going to be like super embarrassed for putting this out there, and like I really there's 100% or
who knows?
that's a very reasonable possible outcome, and I hope to be changing my mind and flip-flopping again.
No, it's fair. Like Jeff was saying, it's absolutely fair. You might be correct. Does it, like you said, right? It doesn't in some ways, it doesn't matter that there are 4 of us if it's not the first Robotaxi ride is not 2025. ARK Invest says that there's a 98% chance that the first Robotaxi commercial ride will happen in 2 years. So 2025 or 2026, correct? So yeah, that's their projections or probabilities, their probability analysis.
Yeah, I mean, look, I mean, this is where you have to just look at the fact, like Cruise was giving quote unquote robotaxi rides, and injuring people, and then they had teleoperation, I guess, every couple of miles occurring. But then there were analysts out there. I'm not saying anybody on this call, but there's analysts saying, well, look at Crew, like look at what they're doing. You really have to dig deep in this data, and you really have to understand what these companies are doing. You have to have somewhat of a common measurement system to understand and compare them side by side. Otherwise, it's impossible. And my whole point in this is, I think it's impossible to actually project that date based on all known given. Even if I get in my car tonight and it drives perfectly, that's not information that's going to tell me when it gets from driving perfectly to having all the features and functionality. Remember, all the features and functionality integrated, tested, and working to a level that's going to say it's ready for robotaxi. And it's one final thing in software development and product development. One of the the rules that's out there is, and as long as you're continuing to add features and you're not at feature complete, that you are extending that bug curve dry down, to some period of time. Now, in software development, where you're writing each line of code and you're going in and you're doing, bug fixes, it's a different thing than what Tesla is doing right now in terms of AI training and neural nets. So the responses there will even be nonlinear. But the point is as long as you're integrating new features, you're creating a platform for more bugs and more issues you've got to deal with. So they've got to get through all the feature integration. I think Tesla would tell you the same thing. And my point is I don't think there's any mechanism to actually measure this until somebody like inside of Tesla starts saying, well, here's our intervention dashboard. Here are the criticals. Here are the non-criticals. And we're just it's so good right now. We're just going to start publicly posting this.
I want to ask the 3 of you guys the same question. Do you believe that Tesla, Elon, and Ashok have visibility and when they believe that they can launch their robotaxi? With all the data they have today, do they have a good sense of that, or are they still also guessing? What do you think, Matt? Oh, what?
I unmute myself because you keep muting me because you don't like that I'm saying things you don't like. Yeah, so I think I think they do have visibility. I mean, they've obviously got the best data possible. Like, we're kind of grasping at straws compared to what they're saying. That said, Elon has been so like over the top optimistic on this for so long that like I think this time actually is different, because what you said, Herbert, about the the neural net approach is actually, it's like 100% true. This like is way different than what they were going through back in 2022. So I think they do have visibility, and I think they're actually like very close with the overall approach that they've got. And I really do think it's just a matter of scaling it up. Now, how long? But I think what Elon's been saying for years is you might find that nth 9 that you need in order to get to that level of safety takes a lot longer than you're expecting right now, because you're I don't know, 4 orders of magnitude away from that right now. So yeah, I think that's highly unknowable what it's going to take to keep tracking down these nines. But yeah, I do think they've got an estimate.
Yeah. What do you think, Xander?
Does Elon have the data? That's the question.
Do they have visibility on when they can launch Robotaxi 2025, or they are also guessing at this point?
I with respect, I think that's a silly question. I just
Okay.
they don't know when it will be solved, because once it's solved, right? Like once the last bug is out of the code. I used to code as a kid. There was, you sit for 10 hours trying to find this one thing. That's not what's happening nowadays, right? You have machines writing their own code. And if they can tweak who's tweaking the parameters, right? It's the weights, right? Is that the understanding of how is that the correct understanding? And I'm the layman here. These are the questions for the people who understand large language models and how they work, and how the machine is programming itself to drive. I look at it, yes, absolutely. They have the necessary information to make to put out an invitation to an event. We don't know if it's going to be unsupervised FSD. Is it going to be supervised FSD for robotaxis? But we are clearly on a path to autonomy. And for me, that's what I look at. Whether it's in 2025 or 2026, I'm still not ready to, back to our original point, to throw darts at options for 2 years out, or I know January calls are now available. I'm still not doing that. I'm just sitting tight, waiting for the information to come. And as Jeff was saying, we just don't have enough information to prognosticate. We're just monkeys throwing darts.
Yeah, Jeff.
I am not a monkey throwing darts. What I'm saying is we don't have the available information here, but Tesla certainly has a model for their existing installed training capacity and their existing set of compute that's in the vehicles. I'm sure they have a model. I think what's going to be more difficult, I think a model with greater variation is going to be as this new cluster comes online, like what is the capability? I'm sure there's still unknowns with Blackwell as well. So they have a model, and it gets more and more granular the closer and closer you're in. But yeah, I think they have a tremendous set of data. But this is also a very difficult problem to solve, and people just have to respect that.
So since I've been the kind of bear today, I want to maybe round out this part of the conversation with why I'm so optimistic in the long run, and just take the time frames out, because like if Tesla's like fully solves robotaxis in 2025 versus 2026, it doesn't really matter that much unless you're taking Goldman Sachs advice and getting into some options. But like Tesla's approach is I think so underappreciated.
Okay. Let's move on to the next topic, which is Q3 earnings preview. Matt, have you started taking a look at that? If we do see a higher, like a record Q3 production and delivery numbers, what's you kind of laid it out at the earlier part. You said that earnings per share is going to be just in line with what analysts are saying. Is there any other metrics you can share with us what you're expecting?
Yeah, I think the big surprise last quarter was energy. It was, the deployments really shocked everyone, like nearly doubling quarter over quarter. I think that was a bit of a one-off just in terms of the timing of certain projects. So, I'm expecting a little bit of a dip from, a bit over 9 gigawatt hours to probably something like more like 8 gigawatt hours or so. As they said many times before, it's very lumpy, so it's kind of hard to tell. I'm not expecting any major surprises. I think it's actually become somewhat straightforward to model. I've been modeling Tesla quarterly earnings for 5 years now, and it used to be like I was shocked at how bad Wall Street was at doing these quarterly figures. But now I think they're actually pretty competent at coming up with an estimate of where the margins will be. I do think that to what Jeff was saying before, the higher throughput, the better fixed cost absorption from having more deliveries, that's certainly going to help. More Cybertruck deliveries is going to help a bit, and I think they've surely reduced the COGS on that a bit. So there's a few things that I think are going to help the overall story. So I think automotive gross margin is going to improve a little bit this quarter. But nothing when you kind of do all the math, it's not like there's going to be some massive earnings surprise relative to what Wall Street is modeling. So I no big surprises there.
Mm-hmm. Anybody have thoughts on what you're expecting for Q3 earnings?
I am aligned with Matt. I think we're dealing with a situation of you're going to have pluses here in terms of volume, fixed cost absorption, and continued COGS reductions from Tesla. Like, they didn't stop reducing COGS on product. You still have a Cybertruck that's a net drag. So if Cybertruck production is up, revenue's up, but it'll drag further on gross margins, even though it's going to be probably better gross margins for the truck alone versus the prior quarter. It's still going to be a net drag on the business until they can get that to break even. So I think it's going to be interesting, but I think analysts are already starting to look ahead, and they have to, again, paint that picture of, is this it on the gross margin side? Like, they put all the incentives in, they brought interest rates to 1% to 2% everywhere. They've done all these different things. Is this it? And then Tesla has all these other outlets to incentivize buyers, whether it's supercharging, which they control that end to end, whether it's FSD, which they control end to end, even insurance. They have multiple different ways to incentivize buyers. So I think, and then with their low inventory, any kind of auto slowdown they would have entered in and seen before everyone else, which is why I think you saw Elon out up front and, both reducing headcount and talking about the difficulties of the auto industry. And the same thing goes on the other side of it. When you're coming out of it, they'll come out of it faster because of that lower network latency, which starts with the lower inventory in channel and all the way to their, the speed at which they're building vehicles, and then their inbound supply chain being that much shorter and localized around all their factories. So all those things matter. And I think analysts just have to connect a couple of quarters together. Sometimes they don't do that. But you are seeing, as you kicked off the show with Herbert, you are seeing analysts now that are just starting to take a broader perspective on the company and that they have before. And it's less about are they plus or minus 1,000 units on deliveries?
Yeah, that's a great last point. I was gonna say, short term, looking at this quarter, it's just we're at the exit of a tunnel that we've been. We can all see the daylight. Now you have the Fed pivot. The big question for me is whether there's recession. Did it happen? Did it not happen? Are we out of? So like this, how many cars? I wonder, did the amount of incentives that they did, does that impact EPS? I'm not going to make any kind of short-term bets on this. Yeah, exactly. So so if that impacts it, is it going to be slightly higher, slightly lower? That outlook is so short. I don't see the purpose of it ultimately, because long term, we have 10/10 event coming. That's before earnings. Depending on what we see, that will really determine where sentiment goes. And so yeah, I'll leave it at that. I don't know what value it brings to discuss the EPS for this quarter. I think the big outlook should be for next year. What kind of vehicles? How is that 50% growth rate going to get filled? What vehicle is there? So those are the things I tend to focus on, and that's why I don't feel comfortable. I'll leave it with this. There's people that are selling covered calls that are so concerned that we're going to run to 400 all-time highs. In fact, I heard 600 yesterday. I literally used the word delusional. I just don't see, even if you have an amazing, path forward that we can start modeling, that there will be that much FOMO that you get to 600 or all-time highs in this quarter, and by the end of the year. Like that's a little too bullish, and so I like Matt's thinking. to be cautious and to model it the way that he is. But at the same time, I just zoom out and go, we're about to have robots, and the ad looks like iRobot, except they called it We Robot. Like, think of the movie and what we're about to witness. So I just focus on the breadcrumbs and leave this stuff to the analysts.
Mm-hmm. Yeah, so I agree with you guys. I think Q3 is going to be muted, but it doesn't matter, right? Because as long as it's not a bad hit, that's the thing that could have held this back even further. As long as it's neutral, it's good. You got the interest rate cuts. I think that has changed the game big time. However, we're not going to go back to where we were when we hit the all-time highs, when there was like free money flowing. We're not there. We don't have free money flowing, but there is money being released now, and there are moving off of cash into investments onto growth stocks. And so Tesla will benefit from that, but not to the all-time highs just because of 50% growth rate in cars. I personally, as somebody just asked me yesterday, would you recommend my friend to buy Tesla stock? And I said, I don't give price targets. I've never given price targets. I don't have a 2-year, I don't have a 5-year price target. What I will tell you is Elon believes, and I believe, that Tesla will get to 1 million robots in 5 or 6 years from now. And when we're there, we're a multi-trillion-dollar company. That to me is the one thing that I could probably hang my hat on much more than even Robotaxi, believe me or not. I've said this for a long time. I'm much more of a bot person than I am a Robotaxi person. I just see the bot being so much easier to understand, to see that Tesla can accomplish this. The training ability is already being done by multiple companies, not just Tesla. They have the manufacturing capability to do this. So the risk of them not being able to produce a useful robot that is priced low enough to be compared to its earnings potential, which is, recurring 10 times more than a car sales, car earnings. This is going to change the game big time. And so we're probably 2-3 years away from that, or at the very least 5 years for it to be a multi-trillion-dollar company. So that's just the way I think. I'm a very long-term person, and it's the bots for me. So yeah, totally opposite from everybody else, right? The analysts who care about the short term, the people who think that Tesla's a car company, and the people who still bank that Robotaxi will happen next year.
Agreed.
Awesome. Good. Thank you guys very much, Matt. Appreciate you joining us. The financial bull, perfect timing just before the Q3 earnings call. I know you got a full spreadsheet, so one day we'd love to dive deeper into that as we get closer, but your comments were fantastic. Do appreciate your thinking about Robotaxi. And of course, Jeff, just a brilliant. I've got so many questions to still ask you guys, but we'll do that next time. Thank you so much, Xander. Perfect timing for you with, options play. And here you got a, was it Goldman Sachs saying buy calls? Okay. Interesting. Thank you guys. Thanks, everybody. Bye-bye.
Thanks.
Thank you.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.